Hello and welcome to Charting the Markets. You're with me, Sean Murison, Senior Market Analyst at IG South Africa. On today's economic calendar, we do have day 4 of that World Economic Forum. And in the afternoon, we have weekly unemployment claims out of the US, building permits, fully fed manufacturing data, as well as an address by ECB President Christine Lagarde. Looking at some charts, where it all starts is that US dollar. So looking at the dollar index, or the US dollar basket, as it's labeled on the IG platform, we do have an interesting picture here on the daily chart. We've had this downtrend that has been in play, suggesting which was dollar weakness as we start to price in what the future holds for interest rates. And now we've actually seen a bit of an inverse head and shoulders reversal pattern. So this pattern suggests a short to medium-term change in directional trend. We've had an upside break of this resistance level at 102.45. And the initial target from that is a move towards 103.80. Now, we do have this little shooting star type formation, so perhaps we could have a bit of a pullback before that move continues. But certainly that pattern, that reversal pattern is in play, and it is a suggestion of a trend reversal. I think traders who are long might want to trail a stop loss. I think you could look at probably that midpoint of this long-bodied candle here at about 102.72. Alternatively, if you're waiting for the first pullback to enter, which is a preferred approach for me personally, although you do run the risk of missing out, a pullback towards that support there, 102.45 for long entry. And then with these patterns, that logic of trend reversal would change if we break a major low, and that would be somewhere about 101.65. So, bullish looking chart for the US dollar at this point in time, although we could have a bit of a pullback before we see further gains. Looking at the euro US dollar, obviously the euro has a strong weighting in that dollar index, the chart that we looked at before, but we do see a bit of an uptrend forming. And that uptrend, we do have the opposite there, which is a head and shoulders type formation. So if we look, I haven't drawn it in like a shaded it in, but if we look, just follow the mouse pointer here. We have this left shoulder, we have this head, and then we have this right shoulder. And then we have a break of what would be the neckline here at about 1.0894. Now, since then, we've had this, the shooting star would be a bearish reversal, suggesting a pullback on the US dollar index chart. We have this hammer type formation, suggesting a pullback from that move lower. So, on the euro dollar. So downside target is sitting at about 1.0755. We're going to see how far this pullback takes us, though. If this pullback does move above that sort of halfway mark of this long-bodied candle, I'd say that it will maybe a bit premature on that reversal and that dollar strength, particularly against the euro. But the way it stands right now, we've had that downside break of the neckline. We do have this head and shoulders reversal pattern, and we do have the next level of support coming in at 1.0755. Failure, depending on your risk threshold, could be on a close above that 1.10 mark while in search for that 1.0755. Moving over to cable, sterling against the US dollar. Picture slightly different to what we've seen on the other crosses with that US dollar. We have this bit of a range-bound trading environment. So we had a preceding move up, and then we have this consolidation at this point in time. That consolidation, that range is considered between 1.2595 support, and we have resistance at 1.2800. Now, off that lower level of support, we have had a bit of an intraday reversal. We have this Harami type pattern, this green candle, which fits somewhere inside of this red candle, suggesting a bit of a rebound. So possible range trading opportunity, targeting a move back up towards 1.2800. But obviously, if you're being a bit more conservative, maybe at 1.2780, looking at these closing levels here just before. If we're looking at a trade like that, could consider having a stop loss on a close below that low, a break of that range support, 1.2595. Now, that might not provide the most favorable risk relative to reward scenario for that. So if you were looking at that long, then you might want to have a stop loss. You could maybe even tighten it to that 1.2636 mark. Moving over to some indices now, and starting off, which I think is quite relevant, I think this would correlate if we do start to see dollar strength, though, is that volatility index. I just wanted to flag this. This is a weekly chart of that VIX. We know that volatility is cyclical in nature, and we are sitting at low levels on that VIX right now. which has suggested risk on in markets, which is what we have seen, the rally in equity markets and that. But certainly if we do see this start to tick up, it would be reflecting a bit of market weakness there. And certainly, if we view this as a cyclical indicator, it is sitting at a bit of a cyclical low at this point in time. That 14 mark on that volatility index, or the VIX, sitting at the lowest levels, more or less at the lowest levels we've seen since January 2020. We do have a bit of this green candle forming here on that weekly chart. So just something to watch, the volatility in markets, usually accompanied with, not always, but a correction in markets. Looking at the NASDAQ, that longer term trend is up. We see the price trading firmly above that 200-day simple moving average, outperforming index in 2023. At the moment now, that rally has stalled a little bit. We've seen the price move into this a bit of a range-bound environment at this point in time. So we've had a rally to a high, we've had our first pullback, then we've had a second rally, which has failed to reach that high. So I would still favor keeping a long bias to trades on US Tech, or NASDAQ 100. This is just a suggestion that we could be consolidating or correcting that longer term trend. And a correction of that longer term trend would be healthier for longer term gains. And we do need to see that. We are up here. I think if we would reconsider looking for long positions on the NASDAQ as an upside breakout, we start taking it at that high. So we start making higher highs again, suggesting that longer term uptrend is continuing. Alternatively, if we do have that correction, we'll be looking at shorting it at this point in time, but maybe waiting for it to, that correction to end and looking for some type of bullish reversal closer to one of these lower levels of support, something about 16,290, possibly 16,165 on that. So it's a bit of no man's land at this point in time, waiting for a pullback for long entry or breakout for long entry. We are a bit overbought in that, so my preferred scenario would see a bit of weakness coming into that NASDAQ, seeing it move down towards these levels of support. And provided that support holds and we see a bit of a bullish tick back in price, then I'll consider long entry on that. Now, when we move over to the S&P 500, obviously there's a lot of the same constituents in that index, and certainly the heavyweights, the likes of the Microsofts out there. We see that price has also moved into that consolidation. What does concern me is that we do have a bit of this M-type shape. Now, that could suggest a bit of a deeper correction. If we do start breaking below this major low here, sitting about 14, sorry, this level is incorrect, 14,690 odd. But we're not there yet. But the suggestion is the same. We are sort of moving out of overbought territory. We are in a longer term uptrend, and we are correcting that uptrend at this point in time. And that correction doesn't have to just be a pullback, could also be a bit more of a sideways consolidation. What I'm watching though is this level here, this 4,690. We start seeing it close below that, and then expect a bit of a deeper correction, but it would still keep and just normalize that longer term uptrend. And be waiting for watching the next levels to try to find where I could find long entry into that index as well. So moving over to Europe now and looking at the Germany 40. Now we had a strong move up. Price is now trading above that 200-day simple moving average. Could argue that it is still a bit of a longer term sideways range-bound environment, but we have been making new highs. And there are some slightly bullish indications here that we've seen this strong aggressive move up, and we see the price really in a cumbersome move lower. Now, you could also correlate that with, a bit of a festive season, sort of less sort of volatility, less activity in markets over that sort of festive season. So, but we have started to correct. Now, the view is, are we in a pullback, or is this a bit more of a consolidation? For me, it's really just watching the levels and trading from the levels. And that has taken us to find support at that 16,330, where I'd be more comfortable on a long side, and suggestion that longer term updraw, that at least a short to medium term uptrend is renewing itself, is that if we have this end of this move lower, the price ticking back, which is what is happening right now, but we want this candle to close above this 16,530 level before we start targeting a move, at least towards about that 16,760 mark, and possibly that high, that closing high at about 16,900. So if we get a strong close here above this dotted line on our chart, sitting at about 16,530, then I'd be inclined to start targeting that move higher and maybe using a close below that 16,330 level as a stop loss indication. This reversal doesn't form. We're waiting to see where the price does find support, proper support. At the moment, 16,330 has been that level of support, but if we close below that, we'd start looking quite a bit lower, that 15,990. But I think on balance, probably still a slightly more bullish bias to that. Long entry considered if we do get a strong reversal, well, like is forming now, but a bit of a higher close, above that 16,530 mark. All right, so looking at the FTSE 100, now this has been in a broad range-bound trading environment for quite some time now, giving us some decent reversals off resistance. We shot past that 7,700, which has been quite a useful level over the last 6 months to a year. Resistance. We hit these intraday highs here. We did find some resistance. You see these long upper wicks showing some sort of price rejection there. And then we've had some stronger lower closes, well, significant lower closes, and a sharp move down to a level that we've had for quite some time. That's 7,410 mark. Now that is currently acting as a level of support. And we're going to watch that level, see whether it holds or breaks. So I think, close below, then we start considering a move towards that 7,260 mark. You need a bit of a strong close below. And you could probably have more conservative targets sitting there, something like 7,325 odd on that way down. I think if you're a bull, you'd be noticing, well, we are actually oversold. So we want to see this level hold. And if we do see that level hold, then it's not enough for me. I'd like to see the price just showing that it's ticking back and that it is actually reversing course, rather than just hovering around that level. And for me, that would need to have quite a strong close above the halfway mark of this long-bodied candle here. And that would be sitting at somewhere about 7,480. So just to see some momentum to move back up before I trust trading off this level of support that move out of oversold territory. Moving over to some commodities now. Brent crude oil. Now, I think this illustrates, if we just start looking at, I just want to change this very, very quickly to a weekly chart. All the charts so far have been daily charts, but just to give you an idea of context, Brent crude oil is trading in a broad range-bound price environment. That lower end of that range, you look at a weekly chart, sitting about $71.10 per barrel, and the upper end of that range, probably about $93.60. In the very short term, though, we have that's just to contextualize what we see happening on Brent crude, and certainly seems to be a point of accumulation closer towards that 71.20 mark. There is a bit of a consolidation happening within that consolidation. We can see between level $76 a barrel and 79.20, just that shaded gray area on the chart. So I think at the moment, we could be looking at trading between those levels. I think for some upside momentum, we do need to see a break above that 79.20 mark. Then we'll have an initial target there about 81.30, possibly 82.80. And if we can get through that, then we start looking at those higher levels of 88.30. Alternatively, for me, looking at a downside break, if the price this support doesn't hold in this range, I'd be sitting and waiting out, because that longer term range support is not that far away. I'd be looking at price reversing closer towards this lower level of support for long entry as well. So I'd be looking for longs on an upside breakout, or in the event of a downside breakout of this support, waiting that out and looking to accumulate closer towards that long-term support, which we saw on that weekly chart. Now, gold, after spiking to that highs, really started to consolidate. Now, it's a bit of a tricky one to trade, because you can say, well, because of that strong move to that new high, that we have an upside momentum and that longer-term trend is up. For me, in the short to medium term, but certainly in a range-bound trading environment now, we had a bit of this bearish reversal here, no man's land, in the middle of this 2010 to 2080 dollars per ounce range, and we are testing that level of support there at 2010. Very small-bodied candle at this point in time, with a very small range candle with a small body. So it's showing a lot of indecision around this level. So we see, interesting to see how this level holds. We get a close below there, start looking at 1970 on that. So if I was a bull, I'd like to see either a reversal of this, a strong close above the halfway mark of that long-bodied red candle preceding. If we get it today, news is not that heavy, so I'm not too sure we're going to see a major movement today. But if we get a downside break here, then I'd be rather waiting it out, looking for long entry closer towards that 1970 mark, provided we can get a bullish reversal of that level. But certainly we are now sitting in oversold territory. But if you're looking for confirmation of a price reversal, it's always nice to just see that stochastic or whichever oscillator you're using, maybe it's an RSI, just adding some sort of credence to that move, some confirmation by ticking back out of oversold territory. If we look at spot platinum as well, another precious metal, another market that has been in a broad range-bound environment. We actually had a nice break of this $980 per ounce mark. Didn't really seem to get much traction, just reverted back into that broad range at this point in time. This level here, 875, is proving to be relevant, and we do seem to be having a bit of a reversal forming there. So we have a longer wick. We have this bit of a green candle there. If I zoom in a little bit, and so that move there, a stronger close there, we could consider if we do get somewhere here, maybe a little bit higher on that close, maybe closer towards that 900 mark, we can start targeting a move towards $940 an ounce and consider using a close below that. Either the reversal low, which is slightly higher, something about 880, or the support level here, 875 might be a consideration as a stop loss indication. We are certainly looking oversold at support, and we have started forming a bit of a bullish reversal. Just like to see a little bit of a stronger close. Here, the stochastic is crossing through its trigger line, so that is a bit of a bullish signal there. It's one to watch, one to consider. That's all the charts from me. I'm Sean Mearson, Senior Market Analyst at IG South Africa, and thanks very much for watching.